Hey everyone, and welcome back to another deep dive. We're always on the lookout for these really interesting trends and ideas that are kind of reshaping the world of commercial real estate.
Definitely always keeping our eyes peeled.
Yeah, exactly. And today I think we've got a particularly fascinating one to unpack. We're going to explore how the whole subscription-based model we see dominating the software world, that whole software as a service SaaS thing, can actually offer some pretty powerful new thinking for how we approach CRE.
It's a really interesting crossover. It might seem a bit counterintuitive at first, right? I mean, we're
Yeah.
talking about physical spaces, buildings, properties, and applying these concepts that have traditionally been associated with, well, digital products. But I think you'll be surprised by just how much potential there is for CRE to adopt these recurring revenue models that have made SaaS businesses so successful.
Yeah, and successful in a way that's really attractive to investors. I mean, predictable, right? That steady stream of income.
Exactly. And that's the core of it. It's less about those one-time big transactions and more about cultivating these sustained relationships that translate into a consistent, predictable income stream.
So this isn't just some theoretical exercise. I mean, we're talking about real-world strategies here that have the potential to boost your property's value, make it more attractive to investors, and ultimately create a much more resilient and future-proof business model.
For sure. Absolutely. And what we've done for this deep dive is we've gone out and we've been digging through all these articles and blogs by experts who are specifically looking at how these SaaS principles are being applied and could be applied in the world of commercial real estate.
Awesome. Well, let's get into it then. So for those of us who maybe haven't spent a ton of time in the SaaS world, can you break down just what is it about this recurring revenue model that makes it such a game changer for those businesses? Why is everyone so focused on subscriptions these days?
Well, at its core, it really represents this fundamental shift away from transactional income, that kind of one-off payment, and towards building a model based on predictable, ongoing revenue. I mean, think about it. SaaS businesses build their entire success on subscriptions.
Right.
Users pay a regular fee monthly, annually, to access the software and its features. And for the business, this means they have this relatively stable and, most importantly, forecastable income stream.
Yeah, you can kind of plan for the future a little better, right? When you know what's coming in.
Exactly. It allows for so much better long-term planning and something that's really crucial in any business, but especially for those looking to grow quickly. Scalability.
Makes sense.
Right.
So as they get more subscribers, their revenue grows in this much more predictable way than relying on, individual sales all the time.
Right. And the sources we looked at, Maxio Newbreed, for example, they really highlighted that this isn't just about a single purchase. It's about cultivating these sustained relationships with your users that translate into consistent income month after month, year after year.
Okay, so it's that whole lifetime value of a customer idea, but applied to, well, renting space, essentially. Now, you mentioned predictability. It seems like SaaS companies have gotten really good at measuring this. We kept seeing terms like ARR and MRR pop up in our research. What do those tell us, and why are they so important in this recurring revenue world?
Those are the vital signs of a SaaS business for sure. So ARR, that stands for annual recurring revenue. And as the name suggests, it measures, well, the total recurring revenue a company expects to generate over a year. And MRR, monthly recurring revenue, obviously tracks that on a monthly basis.
Okay, so very straightforward, but powerful, I guess, because it keeps you laser focused on that continuous stream of income.
Right. And as sources like Friend and Grant and Wall Street Prep emphasized, these metrics give you this really clear, almost real-time view of how much consistent income the business is generating. And that's incredibly valuable for making strategic decisions.
So you're not just hoping for the best. You're looking at hard data and saying, okay, this is what's coming in. This is what we can rely on.
Precisely. And what's so exciting when you start thinking about applying these principles to CRE is that this focus on consistent income, that ability to measure and track it so closely, it translates directly. Embark, among others, pointed out that these SaaS revenue models, they're inherently scalable and replicable. So the same principles that drive that predictable revenue in software can absolutely be applied to physical assets, giving CRE owners that same kind of stable cash flow they're looking for.
I like where this is going. But we're still dealing with a bit of a disconnect, right? I mean, it's one thing to talk about software subscriptions, but how on earth do we take these digital concepts and make them work with actual physical buildings?
It's a good question, and that's really where the real innovation comes in. We can't exactly push software updates to a physical property, like you said.
Right, exactly. You can't just like download a new floor plan or something.
No, no. But the core idea here, the way to translate this into the CRE world, is by embracing flexibility in leasing and exploring new membership models. It's about moving beyond the traditional, kind of rigid, long-term lease as the only option.
Which, let's be honest, has been the standard for as long as most of us can remember.
Right. But Maxio touched on this really well. They suggested we start thinking about how to make our physical spaces more adaptable to different needs and timelines. It's not about software updates per se, but it is about that same core concept of creating something that can evolve and cater to a wider range of tenants, much like a SaaS company refines its software based on user feedback and market trends.
Okay, I'm starting to see the parallels here. So less about those 5 or 10-year leases and more about creating spaces that can adapt to how people work, month to month even.
Exactly. And actually, some pretty clear examples of this are already popping up all over the place in CRE. Shared office spaces and co-working memberships, they seem to be really leading the charge here.
Yeah, those came up a lot in our research. So how do those fit into this whole recurring revenue picture?
A prime example, New Breed, for instance, specifically called out co-working spaces as a leading example of this subscription model in action in commercial real estate. And the reason they work so well is they generate consistent income by offering members access to workspaces and all those amenities for a recurring fee, often on a monthly basis. It's this fundamental shift, right, from just leasing out a block of space for years at a time to actually selling access and a whole suite of services on an ongoing basis.
So it's not just a desk, it's the internet, the printers, the coffee, the networking events, the whole package.
Exactly. It's becoming this whole ecosystem of services built around the workspace. And what's even more interesting, as Friend and Grant and Wall Street Prep highlighted, is that the way you track the regular income from these memberships, it directly mirrors how SaaS companies track their MRR.
So instead of just calculating the total value of, a 5-year lease, we're breaking it down to that reliable monthly income that's hitting the account.
Interesting. What about those traditional long-term leases, though? I mean, those still exist. Those still have value. Do they have any place in this recurring revenue picture, or are we saying those are kind of a thing of the past?
No, they absolutely still have a place. I mean, long-term leases, by their very nature, provide a level of predictable income. But the real shift here, the thing that the sauce mindset encourages us to do, is to actively manage and nurture those tenant relationships like never before.
I can see that being a key difference, not just assuming that a tenant who signs a 5-year lease is going to stay for 5 years.
That's it, you've got it. Wall Street Prep and Embark both emphasize this point. Focusing on long-term leases, yes, but just as importantly, on tenant retention, aligns perfectly with that SaaS goal of achieving truly predictable revenue.
Makes sense. So you're minimizing the risk of that revenue going away. Exactly. In the software world, there's this concept called churn. It basically refers to the rate at which customers cancel their subscriptions. And what we're talking about here is essentially minimizing churn in the CRE world by actively working to keep your tenants satisfied, going above and beyond to meet their needs. You're ensuring that those significant recurring revenue streams continue without interruption.
It suddenly puts a whole new emphasis on tenant satisfaction, doesn't it? It's not just about getting them in the door, it's about keeping those revenue subscriptions active. Now, one thing I thought was particularly interesting was Maxio, through their Saspedia platform, mentioned this potential for creating subscription-based services for things like property maintenance or even access to certain amenities. What did you make of that?
Yeah, that stood out to me as well. It's a really interesting way to potentially layer even more reliable income streams on top of that base lease. So instead of tenants handling their own repairs or paying piecemeal for certain conveniences, you could bundle those into a recurring subscription package.
So it's almost like building a mini SaaS business within your property.
Exactly. And this approach has a couple of benefits, right? First, obviously, it creates a more consistent revenue flow for the property owner. You're not just waiting for that AC unit to break down and then billing for the repair. You've got that steady income coming in. And second, I think it can actually offer a much more streamlined and convenient experience for the tenant. Everything is taken care of. They know what to expect. It's all bundled into one predictable cost.
Streamlined and convenient, two things that tenants are definitely willing to pay for.
For sure. And this idea of building multiple revenue streams, it was something that the SaaS CFO source also really emphasized. They talked about it a lot in the context of SaaS businesses, but the principle absolutely applies to CRE as well. You can diversify your income not just through different lease types, but also by potentially offering property management services to other owners or creating those subscription-based amenity packages we just talked about. It's all about spreading out that risk and building a more stable foundation for your business.
Okay, so we're painting a pretty clear picture here of how CRE can evolve from these large and frequent transactions to a model built on smaller but consistent revenue streams that add up to something much more substantial and much more predictable. Now, our sources highlighted some pretty significant benefits of making this shift. What stood out to you as the most compelling advantages for CRE owners?
Well, the biggest one, and we've touched on this throughout our conversation, is that predictability of cash flow. I mean, it really can't be overstated how much of an impact that has on a business. It allows for so much more accurate budgeting and, crucially, for more confident long-term growth planning. When you know what revenue you can reasonably expect, you can make much smarter investments and plan for the future with more certainty.
It takes a lot of the guesswork out of the equation.
For sure. And then a second big advantage, as DealHub also pointed out, is that these stable income streams make your property significantly more attractive to investors. They see that reliable return coming in, and it reduces the perceived risk of their investment.
Investors love predictability.
They absolutely do. And then lastly, there's that really important piece we discussed earlier, that renewed emphasis on tenant satisfaction and retention. When your revenue is directly tied to those recurring payments, you're naturally going to prioritize building those strong long-term relationships with your tenants and minimizing turnover.
It makes total sense. If those tenants are essentially your subscribers, you're going to do everything you can to keep them happy and keep them paying. Okay, so we've laid out the why, we've looked at the benefits. Now, let's get practical for a minute. For someone listening who's intrigued by this whole concept but maybe feeling a little overwhelmed, what are some tangible, actionable strategies they can start thinking about to actually implement these ideas?
Well, the good news is that the sources we reviewed provided some really excellent starting points. The first, and I think most important, is adopting more flexible lease structures. It's about thinking beyond just a standard long-term lease and considering shorter-term options, maybe carving out some space within your property to create a co-working environment, or even developing these tiered membership programs that offer different levels of access and amenities.
So meeting those different needs and those different timelines that we talked about earlier.
Exactly. And then the second big strategy is actively offering premium services and amenities that tenants are truly willing to pay for on an ongoing basis. This is where you can get creative and really start thinking about those additional recurring revenue streams we discussed.
So what kinds of things are we talking about here?
We'll think about the essentials first. Rock-solid, reliable, high-speed internet is a must-have these days. Maybe you create these state-of-the-art shared meeting facilities that tenants can book through a subscription. Or you could even look into offering on-site conveniences like a fitness center or dry cleaning services that are all bundled into one recurring fee. It's all about creating that added value that makes tenants feel like they're getting more bang for their buck and are happy to keep paying for it.
It's all about that value proposition. You make their lives easier, they're more likely to stay, and that recurring revenue keeps flowing. Makes sense. Now, we can't forget about the role of technology in all of this. How important is it to leverage CRE tech when you're making this shift towards recurring revenue?
It's absolutely essential. I mean, you need the right tools to effectively manage these more flexible arrangements and really maximize their potential. We're talking about things like software platforms that help you track occupancy in dynamic spaces, systems that can automate the renewal processes for those memberships, and tools that help you optimize the overall utilization of your property.
So it's not just about changing your leases, it's about having the infrastructure in place to really make it all work smoothly.
For sure. And all of this, the flexible leases, the premium services, the smart use of technology, it all comes together to create more value and more flexibility for the tenant. And that, in turn, leads to more consistent and predictable revenue for the property owner. It's a win-win.
I like it. Now, our sources also gave us some real-world examples to kind of help visualize this in action, and one that came up quite a bit was the WeWork model.
Yeah, WeWork is a great example, and it's one that a lot of people are familiar with. It really highlights how offering those flexible leases and that suite of shared amenities can generate significant recurring membership revenue. They essentially took the traditional concept of office space and transformed it into a service-based subscription model. And it clearly resonated with a lot of people.
And what's interesting about WeWork, at least from what we gathered from our sources, is that they didn't just offer one type of membership. They had this whole range of tiers.
Yeah. Exactly. It wasn't a one-size-fits-all approach. They had options for individuals, for small teams, for larger companies. And by offering those different levels of access to shared workspaces, meeting rooms, and even those networking events, they were able to create this really powerful recurring revenue engine.
They tapped into that whole desire for flexibility and community that a lot of modern businesses are looking for. Now, beyond these kind of widely known examples, the sources also touched on some more advanced strategies for really maximizing recurring revenue in CRE. What did those entail?
The advanced strategies really centered around this idea of diversification. Even with recurring revenue, if you're relying on a single source, there's always some level of risk. So the SaaS CFO source really hit on this, advocating for creating a mix of income streams. So maybe you have some stable long-term anchor tenants alongside those more flexible short-term options. And maybe you layer on revenue from property management services or the subscription-based access to specialized amenities within your building. It's all about spreading out that risk and creating a more resilient and stable overall revenue base.
So it's kind of like that old adage, don't put all your eggs in one basket. But in this case, we're talking about recurring revenue baskets.
Exactly.
All right, now zooming out a bit. When you think about the bigger picture, how does embracing these recurring revenue models impact the long-term value and attractiveness of a CRE property? Does it really move the needle, or is this more of a marginal gain?
Well, the sources were pretty clear on this point. Recurring revenue models can really significantly enhance the long-term value and attractiveness of properties, especially in the eyes of investors. A predictable income stream is like gold. It's a key indicator of a stable, healthy asset.
So it reduces the risk for those investors.
Exactly. And when you compare that to a property that's relying on those large, infrequent transactions and has potentially volatile or inconsistent income, well, it becomes a much more desirable acquisition for those looking for that steady, reliable return.
It's a no-brainer from an investment perspective. Now, our sources also talked about the challenges in making this shift, but they framed it in a really interesting way, turning challenges into opportunities. What was the underlying message there? What were they getting at?
Well, I think they recognize that making this shift towards recurring revenue models, it can seem like a big undertaking, right? It often requires you to rethink how you manage your property, maybe even invest in new technology or make some design changes to create those more flexible spaces.
There are definitely going to be some growing pains along the way.
For sure. But the point they were making, and I think it's a really important one, is that instead of seeing these as obstacles, you can choose to see them as opportunities.
Obstacles are just opportunities in disguise.
Huh. Yeah, something like that. It's a chance to embrace this new way of thinking, this flexibility and scalability that we've been talking about. And by doing so, you can actually create a competitive advantage, attract a wider range of those tenants who value those dynamic work environments, and ultimately bolster your long-term financial stability.
So it's about being proactive, being willing to adapt, and recognizing that this evolution in CRE is happening whether we like it or not. So we might as well get ahead of the curve.
Okay, last but not least, when we look ahead to the future of CRE, what broader implications do you see these recurring revenue models having on the industry as a whole? I think the sources really hit on this as well. They suggest that these recurring revenue models, they're not just a fad. They're going to become increasingly vital for long-term success in the evolving commercial real estate landscape.
So this is a trend that's here to stay.
I think so, yes. And the reason is, the world of work is changing, right? There's this growing demand for flexibility, for scalability, for an overall focus on the tenant experience. And properties that can effectively offer those things, and they can do it through well-structured recurring revenue models, they're going to be much better positioned for sustained growth and profitability in the years to come.
So it's really about adapting to the changing needs of businesses and recognizing that those needs are becoming more and more dynamic.
Exactly. It's not about just providing a space anymore. It's about providing a service, a whole ecosystem that supports the way businesses operate today.
Well, this has been incredibly insightful. So to really bring it all together for our listeners, what we really explored today is how the core principles of recurring revenue that have driven so much success in the SaaS world can be translated and effectively applied to commercial real estate. It's about thinking beyond the constraints of those traditional long-term leases, actively embracing flexibility, providing value-added services that tenants are actually excited to pay for on an ongoing basis, and then, of course, strategically leveraging technology to manage all of this effectively.
Couldn't have said it better myself. By thoughtfully adopting flexible lease structures, whether that's shorter-term options, creating those co-working
Hmm.
spaces, by really carefully curating and offering those premium services that tenants see real value in, and by effectively utilizing all the amazing CRE tech that's available today, you can really transform your properties into reliable, recurring revenue generators.
And I think what's so important to reiterate is that this isn't just about a little bit of extra cash flow here and there. It's about fundamentally strengthening the long-term value and stability of your properties in a market that's changing rapidly.
Absolutely.
And as we've discussed in this deep dive, every decision we make moving forward in commercial real estate, every choice we make, it really presents an opportunity to enhance our financial stability and our long-term competitiveness by proactively exploring and thoughtfully incorporating these really powerful recurring revenue models. It's a shift in mindset for sure, but it's one with the potential for substantial and sustainable rewards.
Couldn't agree more.
Hmm.
And for those listening, take a moment to really think about your current strategy. Where could you introduce more flexibility? What services could you offer on a subscription basis that would truly benefit your tenants? And how can technology help you streamline all of this and really maximize the impact of these recurring revenue streams? There's a whole world of possibilities out there waiting to be explored.
Love it. Well, thank you so much for joining us for this deep dive into the world of recurring revenue in commercial real estate. We hope it's given you some valuable insights, some things to think about, some ideas to explore. Until next time,
Thanks for having me.
always a pleasure.